Hey folks, Alex here, 9 to 5 to Freedom. Today's video we're going to talk about portfolio diversification. If you're new to this channel, here I document my journey investing into high yield dividends, building a portfolio that will one day replace my 9 to 5. I'm utilizing Robinhood, I'm utilizing margin, I'm utilizing funds from Roundhill, Neos, and others. So if you like this kind of content, make sure you hit that subscribe button and let's jump right into it, folks. So market's been kind of choppy in the last couple of days. And really, I think this was a good test to the overall portfolio that I have. And I think having a small dip in the market is really like a very low cost test to your portfolio. So today we had a very red day. Well, not very red, but it was red across the whole spectrum. S&P 500 was down 0.28%. Dow Industrial down 0.37, NASDAQ down 0.33, Russell 2000 was down 0.92, and we see that gold was down 1.24%. Now, how did our portfolio hold up to all of this red that we've seen today? And that's what I wanted to show you, and honestly, folks, I've been kind of pleasantly surprised. So this is my portfolio. If you see my last video, I was over $250,000. This is my own money invested. Now, I do use margin for those folks who are new. And margin is basically utilizing the broker's money, which at Robinhood, they lend it to you for only 5% if you have over $100,000 on margin. No other broker does that. And if you want to start up an account with Robinhood, I will have my referral link down below. If you open, it's free of charge, and we both get a free share of stock. So make sure you take advantage of that. Now, as you can see here, my margin requirement maintenance 124,861, and my buffer is slightly under $124,000. So with the recent down performance we've seen a couple of days, it did slip. So I'm covered for twice the amount of the margin requirement, and according to Robinhood, I'm in the low risk category. Okay, so let's take a look at the 1 week performance, folks. Well, where was the peak? Well, the peak was really after hours on September 21st, where this portfolio was up over 2%. Now, what happened really over the past week is we pretty much lost, the week's gains. Okay, so if we go back to September 17th, as you can see here, we were at 249.089, and right now we're sitting at 248.642. So we really lost the gains here, but let's take a look at the daily performance. Okay, we started out fairly green this morning, and let's see here, this was overnight, so 9:30 a.m. market opens up, and we start to see a sell-off, consolidation. It went back up, and then we slid all the way down here, and after lunchtime it started to consolidate, and you can see in the after hours it's going pretty much flat. So how did our portfolio do against the underliers, right? So against the broader market, and that's really what the focus is on today's video. So as you can see, for today my portfolio is down 0.06%. Again, you have to understand that it's looking back to what was my portfolio before the open, right? So if we look at the previous day, you can see that the performance has slipped since then. So overall throughout the day we've lost 0.06%. Now if we look and dive into, so really cool feature here is the Robinhood Legend. It really breaks down every single position that I have here. Now you can see my market value is at $498,000, and XDTE today was down 0.36%. And we'll go back and compare that to the S&P 500, which was down 0.28%. So you can see that it slipped slightly more than the underlier. Now let's compare that to the Neos fund, which is SPY, and that only slipped 0.08%. So it did much better than that. Now, the other funds I have are the hedge funds from Neos, and this is a good experiment here. SPY-H is down actually more than SPY-I, 0.09%. Well, that's kind of interesting. Okay, so let's look at percentage wise, what were our largest losses for today? Well, as you can see here, overall, it's showing that I'm actually up because it's counting after hours. I'm not interested in after hours, but these nest yield ones that I've been watching really for the past few weeks here, I haven't really done a video on them because I'm not sure what to think of them. Overall, as you can see, I'm really up high in the position. I'm up almost 6% on Eggy, 9% on Egg Q, over 5% on eggs. But the volatility that you see during the day is pretty crazy. You can be up or down 1%, and these dozen of eggs, they just keep bouncing around. So I'm going to refer to them as the omelet, and we're going to keep tracking them. I love the overall gains on them, which I think are pretty cool. Now, moving down the list here, IWMI, and this is the Russell. Okay, so the Russell, we were down 0.52% today. We'll go back to Yahoo. Looks like Russell was down 0.92. So overall, and let's just confirm this. We'll go to, let's see, what was this called? IWMI, because sometimes Robinhood likes to show you after hours gains. Let's just see what today's gains were. 0.52. Okay, so the NEOS ETF actually beat the underlier for pretty much 0.5%. As you can see that Russell was down 0.92% today, and we were only down 0.52. Okay, we talked about XDT. We saw that we've seen more volatility today on that. GPIQ, I just have a small position. I just tracked this. This is from Goldman Sachs. SMCY, this is just a single one. QDT, okay, let's talk about NASDAQ. So QDT from Roundhill, we're down 0.20%. And we see that the NASDAQ was down 0.33. So let's just look back here. QDT, we'll just confirm with Google. What did we end? 0.25. So we're down 0.25% today. So QDTE, again, it did better than its underlier today. So it looks like it had some protective puts or something like that. ULT will slightly slip today, not too much, 0.18% down. QQH, this is the hedge one. Now you can see QQQH from NEOS, it was down 0.16, and the unhedged one, QQI, was down only 0.14. This is really interesting to see that the hedge funds are actually underperforming the non-hedge funds. So if you guys have these SPY-H or QQQH, let me know in the comments what you think about them. I just have a few small positions in them because I just wanted to really track its performance. I mean, I'm green in the total performance. Overall, QQH, I'm up 2.32%, so that's good to see. Okay, so Maggie, we're actually up 0.04% for the day, which was cool. Now, let's talk about the big hitters and what really kept our portfolio in the green today. And that was, and I don't know if my face is, my face is not in the way. Okay, and that was Bitcoin. Okay, so Bitcoin had a little bit of a run today. It was up 1.29%, and you can see that BTCI was at 1.53% up today, and YBTC was up 1.75%. Now I have a $60,000 position, over $61,000 position actually, between these two funds in Bitcoin. So really, I think the gains that we saw here. Look at this. I was over $1,000 up just in these two positions. And that really flattened out the losses that we've seen from some of these big hitters that we had today, like XZT, QDT, QQI. We see that they pulled us down for today. So that diversification in Bitcoin really helped us out. Now, obviously on the red days when Bitcoin is down, we need something to carry us. Now, I'm not honestly too impressed with the way that I feel like I bought most of these in the high when Bitcoin was probably around $120,000. So I am down 5% on YBTC, and I'm down 4% on BTCI. So really looking for Bitcoin to turn around. But what am I going to get at? Well, what I'm getting at is diversification, right? So in a day like today, most everything was pretty much red besides Bitcoin. Now, if we look back like yesterday, Russell, I think, did better than, let's just look at the 5-day. Yeah, let's see it. So if we go back to Monday, we can see that, let's see, QDT was up. Let's look at Russell 2000 5-day chart. Yeah, so Russell was up on Tuesday. So we were up on the 23rd. And SPY, we'll just look at the S&P 500, was up on the 23rd as well. So there are days where there's a little bit difference in correlation. Sometimes SPY will carry today, other times Russell will carry today. So that's really what I've been kind of thinking about. Now I've looked at my my allocation. So if you look at if we look here, and I did a hypothetical breakdown. So I looked at the funds that I'm currently holding, and what if I were to balance out these positions in such matter. So if I look at my S&P 500 positions, those would be like XDTE, those would be like positions like SPY-I, SPY-H, and what if what we do is we represent it by 20, let me just zoom in a little bit, by 28% of the portfolio value. And then moving down the pie chart here, if we look at NASDAQ and we represent NASDAQ with a 24% representations like QDTE, QQQI, and QQQH, then the gold position, so currently my gold position, let's see here, I have right now, my gold position only represents about 0.5% of my portfolio. But what if I were to increase my gold position to a 5% representation? The Mag 7, which has been a stellar performer, let's say we leave that at 11%. Russell also bumped that up to about a 5% position, and have a 20% position in Bitcoin and a 5.7% position in OLT. So if I do all of that and I break it down, then that will net me somewhere around $140,000. And this is after margin interest is paid. So this represents about a 30% ROI if we just count the dividends, no appreciation or anything like that, which is, I think, something like this. And again, this is just me being hypothetical with this breakdown. I think obviously there's more science that needs to be done on what my weighting should be. Is Bitcoin a little bit too much? Is it too little? Should I be a little bit more heavy in Russell? But that's really what I'm kind of theorizing around. And really my goal is, let's say if I build a portfolio of, I don't know, like $500,000, right, of my own money, and let's say in the future I'll only margin like $200,000 off of that. I want this portfolio to withstand any market fluctuations, right? So I want it to be sturdy. So on days that S&P 500 is down, I want things like gold or Russell 2000 or Bitcoin carry the weight. That's really what I'm looking for. Obviously, I want to be more diversified, so things like S&P 500 and NASDAQ, I want to have more exposure on because it's the broader market. Things like Bitcoin, it's very volatile, but again, I'm really bullish on Bitcoin. I think there's lots of optimism around it in the future. So these are my thoughts. This is what I'm thinking. Let me know in the comments below. What do you guys think? Would you increase your positions in these other sections like Russell, gold, Bitcoin, or should we just stick closely to the S&P 500 and NASDAQ underliers? What are you guys doing? So let me know in the comments. That is the discussion for today. But overall takeaway from this week's performance, folks, obviously we had a very nice week last week. It was very bullish. Overall, we'll just look at this 1 month performance, folks. I'm up 7.24% over 1 month. So that is really great performance there. 3 months, I'm up, let's see here, and again, this is what I transferred to Robinhood August 18th. So I really don't even have 3 months, but I'm up 6%. And you can see that kind of the fluctuation that we're seeing. So a little bit of a pullback. I don't think it's anything to be scared of. So overall, this chart is looking pretty organic. There's no bear signals in my opinion. But that's what we got going on. That's what I wanted to talk about. Let me know what you guys think in the comments. So I wanted to get some of your input and appreciate all the engagement. If you enjoyed this video, give me a thumbs up, and we'll see you on the next video, folks. Take care.